Next up, we've got New Pacific Metals. Now, I've been covering New Pacific for a few years, basically from your first drill holes, and it's been an impressive project almost from day one. New Pacific operates in Bolivia, and the deal with investing in silver mining, 80% of the world's silver is mined in Mexico. You look at Mexico, you don't know what AMLO is going to do. The political risk is extremely high. In order to find, great silver deposits, you got to go outside of the bubble a little bit. You got to look at Bolivia. You got to look at Morocco. These places haven't been, nothing has been explored in over 20, 30 years. These are where the opportunities are. The risk is there, but you have to take the risk to find good investments in silver. Andrew Williams is going to be presenting New Pacific. Now, Andrew, you just joined New Pacific, was it last week?
A month ago now.
Wow, a month ago.
Time
okay,
flies.
so it goes by quickly. But Andrew's a great acquisition. Andrew was an analyst at Sun Valley Gold. Sun Valley Gold is the preeminent gold fund in the United States. It's run by Peter Palmito, who is an ex-Tiger Cub. Andrew, over the years, he's seen, hundreds and hundreds of different companies. He's, received, interest from many different companies and job offers along the way. But the only one that, tempted Andrew to jump ship was New Pacific. So there must have been something very attractive in the assets to make you go for the opportunity.
You
We'd
got
like to
it.
hear more.
Let's talk about them right now. Thank you, Garrett, for that kind introduction, and thank you, everybody, for your interest in the company. And it's been a pleasure to meet all of you over last night's boat cruise and hopefully later today at the cocktail event. It's just been a pleasure. So, New Pacific Metals, we're a company that operates primarily in Bolivia, and our corporate mission is to discover and develop world-class silver and gold deposits. On the slide is our first and our most advanced discovery, the Silver Sand Project. You can see traces of the roads that we've traveled on and drilled since 2017. We've delineated this into one of the world's best global primary silver discoveries of this past decade, and it's one of the major reasons that caught my attention to come and join the company. So why invest in New Pacific Metals? Well, we've got three principal projects. The most advanced is on the left side of the screen, Silver Sand. That's a large pure silver deposit, a theme that we've been hearing a lot about over the course of the day. And it's technically a relatively low-risk operation. Open pit with a tank leach, and in January of this year, we released our preliminary economic assessment on the project, a 4 million ton per annum throughput, which is a project that is well within a company of our scale's wheelhouse to develop internally. That PEA study highlighted 171 million payable silver ounces of production over a 14-year open pit mine life with a after-tax net present value at $22.50 silver of $726 million US and a 39% IRR. And if that wasn't a tough enough act for the company to follow up with, in late 2021, we began drilling our Carangas project. It started with a modest drill program in late 2021. We drilled 35 holes and discovered a 1,000 meter by 800 meter silver zone. And as the year progressed last year, we drilled deeper and discovered an extensive gold zone at depth. So that's been a real game changer at Carangas in the last 6 to 12 months, where in just last year alone, we completed 50,000 meters of drilling with 5 rigs turning, completing 115 drill holes. And that project's also moving very quickly. From discovery in late 2021, we're anticipating to release our inaugural resource estimate at the Carangas project in the middle of this year. And then moving to the right side of the page, our earliest stage project, Silverstrike, is one that we started to drill last year in a very small program, and in some scout drilling hit 200 meters at 1 gram gold. And the Silverstrike project is a big land position, and so we see it as being highly prospective for both silver sand and Carangas styles of mineralization. So, what have been the keys to our success operating in Bolivia? Well, the first is, I guess we can't take all the credit for it. The country is home to exceptional geology. And in Peter's talk earlier, he mentioned the Cerro Rico deposit, which is estimated to contain roughly 3 billion ounces of silver, and it's been continuously operating since 1545. And another point to highlight the geology is it's on trend with Chile, Peru, and Argentina, which are three significant mining countries. And we know that Mother Nature doesn't tend to respect man-made borders when depositing her minerals. So the geology in the country is second to none. Another point to emphasize about Bolivia is it has a deep mining culture. Mentioned previously, Cerro Rico operating since 1545, and today mining is responsible for roughly 30% of the Bolivian economy. And in 2021, Bolivia ranked as the 8th largest silver producer globally. And actually, I think I got to reconcile against Peter's presentation on his slide. He had it at number 6. And then finally, it's been a country that has seen very little to no modern exploration over the last 20 years. So it's created this perfect wide open fairway for us to come in when we first did in 2017 and make two globally significant discoveries with Silver Sand and Carangas, and hopefully a third in the wake at Silverstrike. And as we came in and made the Silver Sand discovery, not only did it put us on the map from a market and investment point of view, but it also allowed us to establish our reputation in the country as a reliable and trustworthy partner. And we were able to then leverage that relationship with the folks in the country to acquire both Carangas and Silverstrike projects, which are the number 2 and number 3 in our project pipeline. So Silver Sand, the claim that we own 100% of is a 3 square kilometer mining concession. We've put 136,000 meters of drilling into the project from 2017 to 2022 and 550 holes. We released our first resource estimate at the beginning of 2020 and continued to infill it 2021, 2022, and late of last year we published our updated resource estimate, which then fed into our preliminary economic assessment that we released just last month on January 9th. Here's a quick snapshot of the deposit. What I love about this is it's broad and disseminated. This isn't a narrow vein system. Big trucks and shovels, low technical risk, and it also comes very close to surface. So it's something that we'll see on the subsequent slides. It resulted in a relatively low open pit strip ratio, which contributes to the outstanding economics that we see in the preliminary economic assessment. This is the 2022 resource estimate. Important to note, 202 million ounces of measured and indicated that goes into our PEA. Most of the time a PEA runs on a much higher percentage of inferred material. Almost all, greater than 90% of our PEA is based on measured and indicated resources at 116 grams per ton silver. Again, grade is king on a gold equivalent basis. That's in the neighborhood of 1.5 grams per ton, which for an open pit is just outstanding. So digging into some of the specifics of that PEA, I mentioned the strip ratio. That's 3.6 to 1, including an 18.5 million ton pre-strip that we'll get out of the way before we start production. So we'll be operating at around 3 to 1. 4 million ton per ounce, 11,000 tons a day. Again, right in the wheelhouse for a company of our size. We're not proposing to build some monster. We talked about the after-tax NPV and IRR, 39%, well in excess of any reasonable cost of capital hurdle rates. And what I love is a less than 2-year after-tax payback between when we put our capital into the ground and we pay it back. And then starting just shortly after year 2, we can start stacking our own cash onto the balance sheet and building the value into the shares. And the first 4 years of production, the way, again, the silver, we're fortunate, presents itself at surface and the way our intelligent engineers have designed the plan, we're going to produce in excess of 15 million ounces of silver per year in the first 4 years. And to put that into context, silver giant Hecla, their 2023 silver guidance is roughly 16, 17 million ounces of silver from its 3 primary silver mines combined. So this thing is, as I said, a globally significant discovery. CapEx, $327 million. We'll get into that in the next slide, but you distill all these factors down, and it makes sense why we have a total all-in sustaining cost of $10.42 an ounce silver, and that actually includes a full allocation of the initial CapEx to build the project. So when we're in operation, that number is going to be even lower. The CapEx, $327 life of mine. There's a piece in there, the open pit pre-strip, and contractor, so we're going to go with the contract miner, so we save the capital from having to acquire the fleet, which is something that helps keep the CapEx number and ultimately the dilution number down from when we go to build this thing. Tailings facility, $25 million. That's a dry stack tailings facility, which is the most expensive option we could have selected, but it's the ecologically, it's the most responsible, and it significantly reduces our water consumption. It also keeps the project footprint nice and compact. And once we've built it up front, we take that hit, but then we're freed up from all the ongoing conventional tailings dam lifts that a traditional wet facility would have to incur over its life. And then as far as infrastructure goes, a big piece in there, we got to bring a power line to site. That's a big chunk of there, the water reservoir and other bits and pieces. So, we're very happy with where these numbers have shaken out. And it's important to note that the quote on building the process plant was based on quotations that we received globally, and same with the tailings facility. And the site infrastructure, the power and the water, we again received quotes from local suppliers. And in Bolivia, our power costs that the local suppliers quoted us at US 5 cents a kilowatt hour is one of the most competitive power costs anywhere in the world. Just a quick overview of the mine layout that we spelled out in the PEA. So in purple is the outline of the main pit. 97% of the ounces are in that one pit. We can see the water reservoir in right there in blue. So what we're going to do to capture, you can see topographically up here, there's a ton of excess rainwater that falls in the wet season. It's like a boom bust, and when it all falls in the couple months of the year, there's too much for the area, so most of it flows out into lakes and ultimately into the ocean. So what we're going to do is capture that water during the rainy season, and then we'll be able to use it throughout the year. And then importantly, during the dry season, when folks in and around the area are starving for water, we're going to be able to then release it on an as-needed basis to the proximal communities. So it's a really cool legacy item that we'll build and leave when we're finished. There's also, you can see the waste rock facility, the dry stack tailings will all be integrated, again, keeping that tight footprint. And then there is an existing access road here in green to the site. We just have to complete some minor upgrades to it, and we'll be off to the races. So we're very happy with the way this PEA came out. And later on in the year, we're going to be pushing to complete the pre-feasibility study. So that is an overview of Silver Sand, and again, that's a company maker in and of itself, but from my perspective, when I was with my former employer as a portfolio manager, what really kicked this company into the next gear was this Carangas discovery. So Carangas is a 6 square kilometer land package, which is double the size of the Silver Sand 100% owned ground, and we started drilling a very modest, I think it was a 3,000 meter program in late 2021, which quickly morphed into a 13,000 meter program, 35 holes, and every one hit mineralization. And so the company ramped the pace of the drilling up last year, had 5 rigs turning, 50,000 meters and 115 holes. We've received assays back for 86 of those holes, so there's still 29 assays left to come in from last year's campaign. And what we've identified, and I'll show you on subsequent slides, is this 1,000 meter long by 800 meter wide, 200 meter thick, up to 200 meter thick silver zone, and then hole 31 our geologists had the brilliant idea to drill deeper at a steeper angle, and that's when we hit the gold zone. So this year, in the first quarter, our plan is to continue drilling with 5 rigs, 15,000 meter program. And our intent is to cut the drilling off at the end of March, have the assays trickle in April. We're pleased to say that assay turnaround time has improved to 4 weeks, where it should be. And then at the end of April, we'll collect that assay data. May, June, work with our consultants and looking to publish in the middle of this year our inaugural resource estimate at Carangas. Here's a panoramic view of Carangas. So the top image here, we are looking west at the aptly named West Dome. You can see some drilling up here. This is the most obvious part for a geologist to start drilling. Battle Mountain was here in the 90s. They drilled a series of holes, hit interesting sniffs, 100 meters, 100 grams per ton silver, but with silver at $5 an ounce. And again, geologically, it looks like the most interesting part of this system. They walked away. And no exploration has been done on this project since. And we turn around and we look to the east. We get to the East Dome. Hole 9 here at the top of the East Dome. Our guys drilled and connected the mineralization from the West and the East Dome. So that's where we talk about this 1 kilometer extension. And then in the Central Valley area, which you can see down here, that's overlain by 35 to 40 meters of unmineralized cover. So not obvious at all to any geologist that there would be mineralization underneath there. And again, our guys boldly took the risk to drill at depth in the Central Valley and connected the whole thing. So that's a broad overview of the genesis of the Carangas discovery. Here's all the drilling we've completed thus far. There's that West Dome we saw in the first picture. East Dome, and then in the Central Valley, which is where we'll show you on the next slide. We've been drilling holes into this gold zone, and that's really been the game changer at Carangas. So you can see here a cross-section through the deposit. This is that silver zone we see at surface. We have hits here like 150 meters at 78 grams silver with a healthy lead-zinc byproduct credit. But as we go deeper, we get holes like this, 450 meters at 12 grams silver. So we lose the silver, but importantly, the gold really picks up here at depth. And we've put hits out like 100 meters at 2.5 grams. We put a couple of them out, and big long intercepts, 500 meter runs at plus 1 gram per ton material. So this is emerging into a second very significant discovery for the company. And this is a slide that gives you a nice overview of that metal zonation. I'm not a geologist, but Dr. Peter McGaw can give you a much better story behind what's happening. But generally speaking, the lower temperature minerals, silver, they are the ones that deposit themselves furthest away from the heat source. And then you get into this transition lead-zinc zone and then into the gold-copper zone, which is where gold and copper tend to drop out of solution at higher temperatures and pressures. So we're seeing this perfectly preserved zonation at Carangas, which I imagine will end up in a geological textbook at some point in the future. We're also highlighting to folks, there's been another well-known discovery that's been made in the industry recently, the Filo del Sol project, again similar with a silver-rich zone in the top section of the deposit. And then it was just within the last year and a half that they drilled a deep hole and hit a gold and copper and rich zone, and it's morphed this company into almost a $3 billion entity. And we see very similar zonation characteristics, and our discovery genesis, our discovery story also follows a very similar path to the Filo del Sol project. So we bring that up. We've talked as well about Archie's Law being recoverable metals, a very important aspect to pay attention to in evaluating projects. Early on, when we started drilling Carangas, we immediately ran a fatal flaw run of metallurgical tests, and we're very pleased to say that it passed with flying colors across the board. In particular, the gold zone, we ran studies for less than 1% low sulfur and 3% sulfur and got 98% recoveries. So very pleased. We don't have to consider metallurgical characteristics as we just continue to drill this thing, and our geologists can continue just peppering this deposit with holes. So finally, our Silverstrike project, our least advanced project, but to put into perspective how large this is, so I talked about our 100% owned tenements at Silver Sand being 3 square kilometers. Carangas is a 6 square kilometer package. Silverstrike is a 44 square kilometer package. And so it's a lot of work for our guys to walk the ground and come up with compelling geological targets for us to drill under our discipline evaluation framework that's been so successful for the company. But we've kind of broken this down and initially started drilling our first targets at Silverstrike Central last year. So this was the first 2 assays we got back from Silverstrike Central. We drilled hole 1, hit 200 meters at 1 gram, and in the first 100 meters of that hole hit 1.5 grams. We scissored it in hole 2 and again hit 200 meters at 1 gram, but in the top 86 meters we got even higher grades at 2 grams per ton. And on the next slide you can see if we zoom further in on hole 2, there's some very high grades that concentrated along this contact with this rhyolitic unit. So that's an important geological hypothesis for our team to follow up over the course of this year. So to sum it all up, this is what we do yet again with what we did with Silverstrike and then with Carangas and hopefully with Silverstrike. Careful project identification. Our guys have been excellent at being in Bolivia, first in the country, to acquire the best pieces of land. Very thoroughly studied them. You can rack up the bills quickly with undisciplined drill holes. Our guys have been very disciplined with that and methodical. And again, Bolivia is wide open for further discoveries, and we continue to have a very active project generation team in the country trying to find the next one for us. Just an overview of our share register. We're blessed with an extremely strong group of shareholders. Silvercorp Metals, 28%. They've got a very strong balance sheet and have been supporting the company from its genesis, along with Michael Steinman, Pan American Silver, under 10%. And then our management and board, a significant chunk of that is our founder and CEO, Dr. Rui Feng. And I also made a personally significant investment in the company when I joined, so I don't show up on those big numbers, but believe me, I care a lot about this company and have skin in this game. And then just finally, our team, again, this is all the product. Yes, Bolivia is a wonderful province, a wonderful country to operate in, but none of this could have been possible without our outstanding team. I talked about Dr. Rui Feng. He's a seasoned mining entrepreneur. He's done it before with Silvercorp. Alex Zhang, he's our bull geologist that has been responsible for proposing a lot of these holes that have created exceptional value for our shareholders. Myself, I joined recently. Carolina, who's in this room, she's a Bolivian, and she's running our corporate affairs department. So we feel like we're very well represented at the management level. And on the board, Terry Salmon, an industry veteran, is our chair, and Dr. Peter Magaw, of course, who's on our board and constantly encouraging us, as he mentioned during his presentation, to think big and continue to flush out the potential. When we looked at the Silver Sand project, we only gave you a snapshot of the ground that we own, but we're in the process of tying up further ground outside of that claim, and hopefully we can make Peter proud by fleshing out the greater potential, not only at the Silver Sand project, but elsewhere at our projects in the country. And with that, I've got 3 minutes left. I'll be happy to open it to the floor for questions if there are any.
Yeah. You all concerned about resource nationalism? I mean, I guess it's just opened up, so I guess they're welcoming you, but you discover so much. Are they going to start clawing back some of it?
I mean, that's a valid question, and thank you for it. I mean, it's a concern anywhere in the world. There's no perfect jurisdiction to build a mine. I think one of the things that is important to realize in Bolivia is they rewrote their mining code in 2014, and the taxes and royalty rates are actually, when you run everything through it, it results in roughly a 50-50 split between the company and the state, which is a very stable platform to be operating from. When you look at case studies where governments have come in, we look at the Cobre Panama case as an example, where they've shaken companies for more, it's usually because the state doesn't get their fair share, and usually we see fair share. This is something that Barrick's Mark Bristow has done a lot of research on, that 50-50 is the fair model, and it's a stable model that insulates you from some of that, some of those fears. So in Bolivia, with this new mining code that was rewritten in 2014, and we feel very comfortable that it is a fair split, and so that gives us a very solid foundation, which is a source of a lot of traditional resource nationalism. So, I mean, that's something that we should be kept in mind. Thank you very much, everybody.